All right, Wednesday, hump day. Let's see what this IPO is going to do for Coinbase. Should be interesting. Looks like we got 13 dividend pairs today on these accounts. Looks like we're only getting $3.78. It's being paid into the account. Let's take a look and see where we sit on our profits. We can add that 378. It's been slow here. It's been slow across all the markets. This is where people make mistakes, trying to do too much, trying to force the market and let it, instead of just letting it come to you. It's important to be patient. If you can't be patient, you're gonna make mistakes. So maybe today we'll see the trading profits surpass the dividend amounts. Of course, dividends come in mostly around the latter part of the month. You can see here last month we had some dividend pairs. It looks like around the 10th, and then the 16th, a big one around the 19th, and then towards the end of the month. But yeah, first of the month, end of the month, that's where you're going to see the majority of your quarterly pairs and your monthly pairs. That's where they actually pay. So it's important to remember that. But yeah, we're right on track. Definitely slow, but if no matter what happens, we'll continue to make money. It does not matter. So concentrate on the plan. Trust that the market will be around tomorrow. Might be down tomorrow, could be up tomorrow. We don't know. We don't care. But we have a strategy for everything that's happening. Doesn't matter. You see a little bit of upward movement, but there's no correlation to our stocks and the overall market. We don't pay attention to those numbers. It could be down, we could be up. It could be down, we could be down, and the market up. It doesn't matter. You need to focus on each individual stock. Yeah, we got. I never trust these. Like if you look up here and you see this 152, and this is where it closed yesterday at that approximately 150, 107. You have to look at the spreads, and I mean this one might be accurate because the spread, well, that's its average price. But if we go over here to the classic, where we can actually see the bids and the acts, what the heck were we looking at? We were looking at PPG. A lot of people don't pay attention to this stuff, but it's important because you might be making decisions based on erroneous numbers. See, like the spread here is 143 to 152, so I wouldn't actually trust that. Just something that they paint on there. A lot of people make bad decisions on that. But if you have a system in place, you don't have to worry about that. It's just a number on your screen. It's showing to be positive, good, but it could just very well be negative when it opens. You don't know. So you look through, to see where you're sitting at each individual one. It gives you a better idea of, where your portfolio is. But if you're only doing this 30 minutes in the morning and 30 minutes in the evening, maybe before you're going to work, it's real easy just to look at your positions like, hey, is this up? Do I need to change? Am I over my limit? Like what's that one that's up? It's not Fang. Maybe it's Maine. Yeah, see like this one here. Let's go look and see. 41.70. That could be right. Who knows? It shows it's up 26 cents, so it might activate on the open. Might sell. been bouncing around there for a couple of days. You just never know. The spread can close awful quick in the minutes leading up, but you don't focus on them. You just be aware of it. Now, if that thing was up like $4 above it, I'd be trailing that to try to pocket a little bit more cash on the move. Because every little bit helps, and that's what we're trying to do. You nickel and dime it, but if you understand this at the small level, at in a small size account, then you'll be able to handle the bigger accounts because movements are magnified when you start going up in the amount of shares. But if you can't trade one share, you're going to have a real hard time trading 100 shares. Everybody think, oh yeah, it's easy. Yeah, well, when 1 point's equaling $1, and then all of a sudden it's like, oh, I've got 400 shares. What do I do? And it's going down. It's like, if you have 400 shares in anything, you're probably over leveraged. Depends on the size of your portfolio. I'm talking anything under 100,000. It could get there over time. You can see some of these at 156, 126, but these aren't bought outright at those numbers. That's just worked over time to get up to those max shares. We do things a little bit differently, but it's all based on the size of the accounts. Each portfolio is different. No one is the same, not unless you're trading them exactly the same, which wouldn't make a lot of sense because you're not diversifying. You could have a cash account, you could have multiple retirement accounts, Roths, SEPs, you name it. You just have to monitor what you're doing and understand that scale, it helps you, and trading small helps you. That's why you listen to Warren Buffett. I mean, he'll tell you. He says the retail trader has a distinct advantage over him. They're much more flexible. You actually 20% making 10% of 100,000 is a hell of a lot easier than making 10% of 1 million. But yeah, it doesn't look like a heck of a lot has changed overnight. But like I say, this is a 50-50, right? We have no idea if this is going up. We don't have an idea if it's going down. I stress this because everybody wants to guess. Everybody wants to have an opinion. It's like, okay, where's this going? Is it going up or is it going down? I have no clue. None of this matters. All I know is what I have as an average cost on this portfolio. It tells you, right? So you're like, okay, what are you down? Let's find TLT. Where's it at? Oh, it's up, so it'll be up here somewhere. Yeah, okay, so you're down 18 cents. Let's go back to Classic. It's easier to look at to see your actual numbers. So, okay, you're in it for 155.69. You got 4 shares. Make 1.5%. If that comes down further, this will increase the percentage, but the yield, that's the yield. The dividend amount, it looks like it's staying the same. Seems like it fluctuates a little bit. It's actually come down a little bit over time. I didn't notice that. But it's still paying over that $1.20, so we're still a player. If it stopped paying dividends, we would, just hold this position. Doesn't matter at that point. It's not making us any money. The only thing we can benefit from is a move up. I'm not going to take a loss on the position. Maybe it starts paying dividends again. You don't know. It looks like this thing pays. It pays on a weird structure. It's because it's a ETF. Yeah. Looks like it's paying March 1st, February 1st, December 17th, December 1st, November 2nd. So kind of, these are consistent, but these ones over here weren't. And there's reasons for it. I don't really care what the reasons are. I mean, if he wants to pay an extra dividend, I love the end of the year because so many dividend paying stocks, if they're doing well, they tend to pay out even more, and it's just free money. And it just helps your bottom line and all your portfolios. So when you start managing multiple portfolios, it adds up to a lot of money. So there's that PPG. All I'm doing is looking at the ones that actually are showing something, and then not making any decisions off of it, but I can get a better idea. Once you watch them for a little bit, I'm talking in the morning, I'm not talking about all day. I don't care to look at these things all day. It doesn't matter. They're going to do what they're going to do. They're either going to go up, they're going to go down, they're going to hit, my sale price. Somebody's going to give me what I want for it, or it's going to go down, and we'll buy more shares when it gets down to a certain level. There's many, many different strategies you can use, but the main focus of any portfolio is not to lose money. So the only way you can do that is if you're not going all in on positions. It's just simple. It's simple math. You can't make any money on a stock that's dropping. I mean, it makes sense, right? But the only way you can make money on a stock that's dropping is if it pays dividends. So if you're investing in growth stocks, you're speculating, right? So you've got to think about it. I'm not telling you can't or you shouldn't. But what I'm saying is I choose not to, because if if the market decides to go down, or have a position that just doesn't go up any higher and I can't make that profit, I have to have a strategic reason to stay in that position. Well, the reason is I get paid to stay in that position. And sure, it's not much, right? But it's all based on the size of your portfolio. But if you decide, yeah, I'm just going to buy in here, maybe it's $200, and you've got your whole portfolio in one stock. And hey, it's great if it's paying dividends, right? But what if it never comes back up to that price? You're depending on dividends now. You can't ever sell it. My opinion is you never sell it. I've never sold anything on purpose. Okay, I've had things sell from underneath me, which you didn't have a choice in the matter. Whether, I think a couple of years ago it was AIG had a bunch of high-paying ETNs, which I would never go into again. They just said, "Oh, we're just done, and whatever it's worth now, we're just going to give you your money, whatever whatever you've got left in it, the cost basis." And I think they were negative, so I ended up taking losses on those. But they were just sold out from under me. There's no recourse. They just did it. So I mean, you need to be aware that that stuff can happen, but it's not likely in a stock because they're individuals. When you start getting into ETFs and ETNs, it can happen. So I choose to stay away from those just for that reason. I mean, you live and learn, right? But it's been years since that happened, so I'm like, well, they were paying pretty high dividend percent yields, and the dividends were high. It was like $4 a year or something, and dividends were like in the 20% range. Crazy. It wasn't sustainable, and I knew that, but I had had them for so long, they had paid for themselves. So whatever I gained back, if I had 2,000 in it and I ended up with 500 returned to me, I know that I already made that money. So yes, it was a loss, but it wasn't actually a loss. And if you look at it on the numbers, the portfolio continued to grow, and those portfolios, that was such a small percentage, it just doesn't really matter in the overall scheme. But when you're taking, if your losses, I guess the current way of thinking, or it has been for a long time, what they preach to everybody is, make sure that you take small losses, and you make your gains bigger than your losses. Well, the problem with that is, if you understand what the mean is and the return to the mean, and there's a lot of math involved in this, that probabilities play in, that if you're taking small losses, you're going to have a lot more small losses than you will big wins. Reason being is the price is so far from your average cost, it's a lot easier to hit your losses. The probabilities are you're going to hit your loss before you hit your win. It's just, I mean, they've got everybody thinking backwards. And, you can't think like that. So I chose, and I'm not telling anybody what to do. I'm just trying to relate to how I think. I think outside the box. I think for myself. I listen to common sense. Some of their strategies may work on a large scale, but when you're talking small numbers and you're trying to grow a portfolio, the worst thing you can do is take losses. because every one of those losses add up. So I mean, if you take $1, well, let's say you have a tight a tight stop on a position, so you bought 100 shares because you're listening to some guru, right? And maybe it's $5, or let's make it 10, make it a nice round number. So you got $1,000, right? And they tell you, make sure you put the stop. It's a 2-for-1. You want to try to make twice or 3 times the amount of money for the loss that you're willing to take. So just the numbers would tell you that. Let's pull up a chart here and we'll draw on it. So if you take that, let's find one that's let's use $17, right? We'll just draw a line here. So let's say you bought it at this price, right? And you were told, okay, you bought 100 shares, so that's $3,400, right? At 17 bucks. You're told put a stop in at $16, meaning that if it goes any lower, if it touches $16, you're out because you picked the wrong direction, right? But they want you to go to $19, right? Up here, that's your target price, and here is your. Let's move that up a bit. Let's move this up a little too. So there's 17, 16, and 19. What they're trying to tell you is that when you pick something, you want it to go from here at 17. You've got $1,700 invested, and you're going to make $200. That's your target because you're talking an amount, right? You want $200 profit, saying $2 away. But whatever that is that you're targeting, you need to be putting a stop in at $16. So when you start thinking about probabilities, what is the probabilities of hitting this versus hitting this? Well, one's further away than the other, right? So if we look on the number line, all you got to do is add it up, 200 to 100. What's easier to hit? This 100, right? Because it's a 50-50 in either direction. So the tighter your stop, the better chance you have of losing money. Now most people would think, well, how about I go ahead and just move that down to 15. So now it's a 50-50 again, right? Sure, makes sense, right? Well, how many times has it got to hit that? Once you hit that, how long is it going to take? So now it's 200, right? That's what you're trying to make. You're going 1-for-1. Now, how long is it going to take you to make it back up to even? Because you just lost 200, so now you got 1,500. Let's say that's all you have. So you can't buy at 1,700 again. You'd have to buy at 1,500 at a minimum, and then you would have to gain $400. So now it's even harder because now you're putting that stop at $200 below, where you'd have to do it 400 below. So the whole time, this strategy it's flawed from the standpoint that you can't make any money in the meantime. You can't see when the market's moving up and down. What ends up happening is you're creating wealth based on time because you're getting paid those dividends. All right. So if you keep getting paid dividends, what happens is this comes down. Your average cost comes down. So if you're paid $1 on 100 shares, your cost would now be $1,600, right? You can move that. Now, I don't use stops, but let's just get that off of there. So now your target price is still at that 1,900, but your cost is down here because you've already taken $100 out of the market. Let's just say it floats around down here on the bottom. You go another year, now your cost is actually 15. So if you wanted to make that 200, you could actually sell it for what you actually paid for it at the 1,700, because you've already taken 1,700 or you've taken $200 out of the market, right? But we choose to go smaller and let that float around. I mean, that's a simple representation, but this is what happens to people in the markets. They constantly there's nothing, I mean, if you're using stops, you must have a reason for it. I would never question anybody. But you got to understand, using stops is the fastest way to lose money. Now, if you're not into losing money, if you're using leverage money, you have to use stops because it can multiply. That's why I don't, endorse options or futures. Now, if you know what you're doing and you understand money management, then you can play around with them. But it's a tough road to go, and you truly need not as much as you used to back in the day. Now they have micro products, but they're still very dangerous if you don't know what you're doing. I mean, you can wipe out a lot of cash in a short period of time. So I choose to pull in cash consistently. A lot of people are like, "Whoa, you can't make any money like that." And I was like, "Okay, we constantly pull in money. We have winning days every day, right? Some days we don't pull in any dividends. It's just the way nature of the beast. Sometimes it's just small amounts of dividends. But then, same thing holds true. Are we profiting on the day-to-day basis? This is the whole key. When you can get this up to 1% per month, that's 12% per year. That's just your minimum that you should be targeting through trading and dividend collection. Rent. You're getting rent. Now, just before this thing opens, we got about 8 minutes. But focus on collecting money consistently. I don't care how much it is. If you got a small account, as long as you're not losing anything, you're winning. You're growing your account. It takes a small amount. You have an opportunity now. There's no fees involved in trading equities. I mean, I don't know how long that's going to last for, but even if you had to trade, I mean, I still pay $1 per side with Interactive Brokers, and I just work the price, okay? Which means the average cost that I pay for it will actually show up $1 less. So then I just work the numbers, and if you watch any of this, you'll figure this out over time. Every once in a while, I'll throw up a little kind of a helper chart for those that don't understand how to get to $1. If you only bought 4 shares to get to $1, you need 25 cents, right? And you just multiply the two. So it just works that way. It's pretty simple math. I mean, it's nothing. It's not some crazy algorithm to try to figure out what your profit target's supposed to be. It's just I have to factor in the dollar on these particular accounts. Like all my other accounts that I work, E-Trade, TradeStation, what is that? TD Ameritrade, Schwab, all these different accounts that I manage, there's no fees. So it's just a straight. So instead of targeting on this one here, it'd be $1. It would be $1 less. It'd be 154.15. I already know that I have to pay $1, and I only have 1 share. And people say, "Well, how can you make any money?" Well, watch. If you don't understand scale, you're one of these that is not going to listen. You're just going to continue to beat your head, and that's fine. I mean, it might take you a few years, but eventually you get around to it. But there's so many people out there that have convinced you that you're going to get rich quick in the stock market, and some people will. A lot of it can be luck, but you also think, if you got a small amount of money, you can grow it fairly quickly at 12%. If you had 10,000, that's 1,200. If you understand how money works, compounding interest, just look up some videos on compounding money. Now that's just if you don't add anything to it, you'd be surprised how fast money grows. Now if you start adding a little bit of money and managing it correctly, you might have that year where you hit 20%, and all of a sudden your account's exploding. You're like, what the heck? But people get, everybody has a different ceiling on what they're comfortable with. You hear it all the time. The people that win a lottery, it's like they couldn't manage $100 in their banking account, and they just happen to come get lucky on a $50 million, and it's gone in a year. And you're like, what the hell, man? Like, well, the same thing holds true. If you can't manage $1,000, how do you expect to manage 100,000? But this is why I'm trying to show you how to manage small accounts. These are small accounts. Okay, this one's 19,000. Well, it's actually 27,000, but there's only 19,000 invested at the moment. Learn how to do it at the low level, and you'll be able to do it at the high level. High level meaning more money. But if you, like I say, if you can't manage, if you can't do what I'm doing right here, there's very little risk involved here, right? And all you're doing is managing your account. You're pulling money in consistently each month. It's just like owning a piece of real estate. This is what Warren Buffett does. Okay, they probably a little bit more sophisticated. Probably have. The funny thing is, I kind of doubt it with him, the way he talks. I've never met the man. I've watched a few videos of his over the years, but I understand his strategy. And I mean, you can't. Like, if you want to say that he's got friends in high places, that's fine. But the man started with $1,000. The only reason he's got friends now is because he's a billionaire. All these gurus want to latch on his coattails and say, yeah, yeah, yeah. It's like, whatever. He's the man. Him and what's his buddy's name? I always forget this. Can't remember his buddy's name. Probably had more influence on him than he did himself. But so here's another one, Tyson. Looks like we got a decent spread there. Looks like about 80 cents. So I don't know if I trust that. I don't know if I trust that chart or that number, 7734. It might be real. You never know. But we got about 2 minutes, and we'll see if we could pull anything in this half hour before we cut it. I got to go get license. It's due. But I think what's going to be interesting is Coinbase. What's the market showing? Yeah, flat opening. Shocker, huh? You can just look at your profit. You can see very little profit, right? And you see a flat day is usually low profit. But when you see consistency is when you see profit coming up. And it's a wave. If you were to put this on, well, I mean, you can see it right there. You can see profit, 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 profit. Just keeps rising. And then you see it jumping up, market's going up. And this would be a correlation to your accounts, not the overall markets, right? So you see it flatten out. There's a flat spot there, and then it starts going up. But what's interesting is we're seeing a flat spot in our accounts and the overall market. Everybody's complaining about it because there's no motion. There's no movement up or down. And who knows what that means? Maybe it's the top. Who knows? Maybe this thing comes crashing down next week and they just keep pumping money in it and it keeps on crashing. They don't know what to do. Gets out of control. It's going to be interesting. But we know how to handle it, right? Because we're not going to freak out. We're not going to jump ship. We're just going to collect our dividends on the way down. And we're looking for opportunities in the market. It's not, business is not going to shut down because the stock market crashes. It just doesn't happen that way. All right, so we got, what is this one? MPC. So we're long MPC. That's Marathon, pretty sure, Marathon Petroleum. Yep, Marathon Petroleum. So we go down to, I guess we got to get on the right account. MPC. So we just bought that. So the first thing we do If we go in here, 53.58, and how many shares do we buy? 2. All right, but we'll add the dividend amount. That's what we're targeting for our profit. Now we have to add the commission. You don't have to do that on an account that has no commissions. TD Ameritrade, E-Trade, any of the, even if you had a Interactive Broker account, but not their Pro version, you can have their IBKR Lite. But I always go a couple pennies higher, just for the fact you got federal fees in there. So it all adds up. You got 2, 3, 4,000 trades by a penny. It adds up. Okay, so we'll now put a close on it. That ensures that we get all the shares. The reason why I'm teaching you that is because if you don't close it, you might be like, oh, I only have, you might have 100 shares and you put in a closing order, or not a closing order, but just a sell order, and you don't pick up all your shares. 56.50. You want to close the entire amount. The whole transaction is now sealed. So that's the deal. I either get this $2.40 on the move, right? I have $107 invested, or I'm going to collect 4.5% on that $107 over the next year. That's how you have to think. If you're thinking, oh, this needs to go to $100, good luck. The chances of that happening, think probabilities like I was talking about earlier. What's the probability of it going? Do you have a better chance of it going to $100 or to this 56.50? That's your target price. Start thinking close to home, close to the mean. Your mean is what you paid for it, not somebody else's mean, not what somebody put up on the chart. Your mean is what you paid for it. Okay, so what I'm doing here, this is my strategy, one of many, right? I show this to everybody because this is the one that I find to be most versatile for most newcomers. It's very simple and straightforward. All I'm doing is putting an alert in because my next buying opportunity at this point, based on my mean, is $40.15. There's one of two things that can happen now in this particular chart, okay, or with this price. It's either going to go up or it's going to come down. I'm either going to get paid or I'm not, and it's going to come down, and I'm going to DCA, dollar cost average. My average cost is going to come down. I don't know what my max shares are going to be in the future because this can change, but that's the only variable on here that will change how many shares or the max amount that I could ever invest based on the size of my account. I can't stress this enough. If you're buying 100 shares of this in an account of $19,000, well, I mean, you couldn't do, well, you could buy, if you had $19,000 and you didn't own anything else, this is your first purchase, you could buy $5,300 on 100 shares. And all you had to do is multiply $2.60 by that move, and at 100 shares, you make 260 bucks. That sounds great, doesn't it? Do you know for a fact that it's going up? This is my point. I'm not willing to take that risk because if it does come down, and it came down here to 40.50, and you didn't buy anything else, you might have and say, okay, I'm going to DCA this one position, and I'm going to make money off this one move. How long are you going to wait? Sure, you're going to get paid that 58 cents whenever it comes around, but where's it at? Where'd that thing go? There it is. You're going to have to wait till May 18th to get your, oh, looks like they're going up. 59, 61, 62. That tells me that they plan on making money in the future, right? So I don't know if it's going up. I don't know if it's going down, but if they're going to increase their dividends, that should tell you something. But going all in on positions, that's totally up to you. You can do whatever you want. I'm just telling you, from my perspective, we don't do that here. We haven't done it in years. I mean, I'm talking 20 years. That's why we don't have losses, because we don't overextend ourselves in any one product. But yeah, another flat day. Shocker. What's FANG doing? Moving up. Yeah, it's hard to say. That's why you don't guess. You just let it come to you. And you're like, yeah, it's a boring day. Go do something else. Do something constructive with your life. Don't sit in front of the computer complaining that the market's not going anywhere, because you can't affect it. In reality, the only people that are really moving the market are institutions, big money. Be buying 1 or 100 shares really makes no difference. They want it to go a certain direction, it's going to go that way. I'm not sure there's a lot more people involved in the markets right now, but with the amount of profit that the billions of dollars in the last quarter that Goldman Sachs just made, that might actually activate. What was the high on that? 41.99. Now, it's real common, at least once, twice a week, where I'll show this and everybody's like, oh, it's a conspiracy, 41.99. It has nothing to do with any conspiracy. It's just price movement. There's nothing going on. Everybody can see this order, okay? If you were to go to level 2, level 3, you can see this order sitting there. Somebody's sitting there looking at this order saying, hey, there's 4 for sale, right? You can go look at it, and if you have that level of expertise, you can see this order on the open market. Hey, I'm sitting there waving my hands. Hey, I got 4 shares for sale at $42. Who wants to give me $42 for these 4 shares each, right? You're just waiting. That's all you're doing. If nobody wants to pay me, what am I getting? I'm getting paid this 20 cents on each one of those shares, so 80 cents a month. And what does that come to? Right now it's 5.9%. Okay. Multiply this by multiple stocks, by multiple accounts. You have to think scale. It's just a numbers game, people. You keep repeating this, you show people, and people just don't believe it. It's like, well, do you actually do it yourself and you have some patience? I think the biggest problem that people have is they're so far in debt and they don't have excess cash, and they're trying to get themselves out of debt in one fell swoop. And with that lottery ticket, I get that. Pay off your debt first. Stop trying to, you got yourself into it, that go bankrupt or something. I don't know. Talk to your financial advisor. I don't know what to tell people, what's that saying? You can lead a horse to water, but you can't make him drink. If it's too easy, people think, oh, there's got to be some catch. Yeah, the catch is you can't be massively in debt. I mean, if you don't have a mortgage or something, that's kind of different, but you're still in debt. But once you get totally debt-free, no mortgage, no anything, and people are like, oh, looks like we sold TSN. Let's check that out. Need to post some of this stuff on Twitter. Which one was that? So 364. Right? So you look back and you're like, well, how long have you held that for? Well, let's take a look at the chart. TSN. It's on this other one. TSN. And people want that, it's like, hey, so we bought it somewhere around here. So maybe we had, let's just say we bought it back here. So we've had it for 6 weeks. well, you only made $3.64. And I was like, okay, you're looking at a small point in time, right? Well, I can't make any money like that. And it's like, well, I mean, if you're just focused on one stock, but what am I talking about? We're talking about thousands of stocks, right? So let me copy this. I gotta send this over. TSN. Put that up on Twitter. What was the percentage gain on that? 2.3. What was that on? Oh, MPC. Let's see what that chart looks like. Yeah, we'll put that one up too. Why not? MPC. I get a kick out of some of the people on Twitter. Why'd you do that? I don't know, man. But some people just don't get it. So it looks like it's just going to be another kind of slow day, but we'll see. You get about 18 minutes. I got to get some stuff done. I'll check out these other accounts. It's nice though when you have alerts. That's the biggest thing that can help you, so you don't have to watch these charts. You know, once you get the scan, you know, you can put your orders in. You put your alerts in for the next level down. You take profits. You know, if you buy something, you automatically say, hey, I know what my target price is going to be. But like I tell you, people, as like the further away you put your price, the harder it is to hit from your average price. That's all you really have to know. I mean, you know, there's some traders out there that will go for pennies, right? But they're buying thousands of shares. That's your institutions. They're looking for small moves in the market to make $1,000 a day. We're not in that boat. It's a big risk though on their side, and they can take a big loss if maybe it doesn't move that 1 penny up, you know, and it moves 10 cents against them, and they have to, you know, they have stops in because they can't afford to let that thing continue to go down, or maybe they don't. I don't know. I'm just saying that when it goes against them, they either have to be willing to stay in that for the end of time, and God knows how many shares they have. But see, a lot of people are under the under this idea that they can get in and out of a 10,000 share trade just like that. It's pretty hard. They have to scale in. Sometimes it could take them a week, 2 weeks. Just depends on the amount of volume, and that's why, you know, you hear the pump and dump thing. They want as many people involved in the stocks when they're selling, you know, and they're telling you to buy. That's the whole reason why they do it. That's why you hear these shows talking constantly about buy, buy, buy. If anybody knows that voice or that thing, buy, buy, buy. We need people buying because we're selling. Don't think it happens? It most surely does. Now, can I prove it? No, but I mean, that's how these guys work. They work together. They're criminals. Yeah. Or they're just smart because, you know, they paid enough people off that they can get away with it. But there's all kinds of, I mean, there's constant investigations going on in SEC. What was that? A couple months back, I guess somebody, was it bull trading? Some weird thing, some futures guru that, I don't know, he was pumping all kinds of stuff and he got caught. SEC came in and busted him. Shut down a bunch of his stuff. Not talked about much, but I mean, you can find it if you look for it. Yeah, I probably have to look around. SEC comes down on futures traders. See if that shows us anything. Yeah. No, I don't know, but there was a couple of videos out there. I don't know where it's at, but it's funny, you know. Maybe let me see. I gotta find this now. I think maybe the guy's name was Jason Bond. Raging Bull. Yeah. Yeah, Jason Bond, $135 million fraud. Yeah. And Jeff Bishop, fraud accusations. Yep. That was December of last year. Yeah, there's an author of The Raging Bull. Yeah, check it out. It's, you know, there's all kinds of stuff out there to see. Yeah, you can find it. Just look up Jason Bond fraud. But yeah, you get the idea. I mean, there's a lot of shysters out there. I made 135 million. I get it, and all for trying to sell books or some program. Basically, just making claims that are total lies. But people want to believe that stuff, and then they throw all their money in. They follow the system, and they get slapped down. They're like, I thought this system works, and guys like, well, we told you, it's just a education thing. I mean, you shouldn't take it for gospel, and people do. Well, that sucker had a good move this morning. Maybe I just didn't pay attention to it. Stuff just kind of floating. Where was that one? This one is just consistently grinding higher. I've had it for a long, long time. I mean, years. But it's been a good pair. Fang we picked up last week. Somewhere in there. We've had that many, many times. If you're trying to pick tops and bottoms, I mean, it's easy to go back and look at this ancient information or information in the past and say, well, had I bought right there and sold right there, if you're a new trader, this is automatically what you're going to think. You're going to come in here and you're going to say, hey, buy low, right? There's the low on the chart, and I'm going to sell it up here. So how did you know that was the low? It was in the past, but you don't know what it's going to be in the future. So what's your strategy? And people do this. This is the first stage of failure, because if you're looking at charts, right, they're good for reference. Let's put it this way. But for making a trading decision, what I use is price. So if you look at that, say, okay, it's 279 and it's 139. I wish there was a way I could change this to just a, what do you call it? I'll have to look. It's been a long time since I've had this charting platform for 28 years, and it doesn't have a ton of functionality on its charts, but you could get rid of all these ups and downs, like, just make it a line chart if you wanted to. There's a way to do that. Anyways, the charts will fool you because you'll think you'll see something. It's like people like to use these, like it's all subjective. It's all how you want to, do your charts, and say people call this because that was a high price at one time, so that was a resistance, right? Because it wouldn't go any higher, and this would be a support because it wouldn't go any lower, and that's fine. I mean, if you want to use it that way, you can do it, but you need to understand how to manage your money. You can draw whatever you want on the chart. If it helps you decide where you're going to get in, that's fine. You don't have to use anything I tell you. I'm just telling you that you can use that all day long, but if you're over leveraging yourself in your account, you're not going to be able to perform. You're not going to be able to hit the numbers you're capable of hitting. When things go against you, it's going to be hard to recover. Because then you're in basically a waiting mode, and that's not a good place to be. Sure, as long as you're not willing to take a loss, if you can have all your money in at the top, that's fine. As long as you're getting paid dividends. But if you're invested in Tesla ain't going to pay you anything on the way down. You're just hoping that stock splits. You're hoping that you can get out and it comes back up. It goes up so you can make a profit. And most people are just willing to, well, I'll just take a $200 loss. At least I can start trading. Well, if the market's going down, the problem you're going to have is everything overall is probably going to go down. That's why they call it a bear market. We've been in this bull market forever. 12 years, something like that. So, I mean, you should be profiting on the way up, constantly taking little bits out of the market based on the size of your account. If you got a $5 million account, it's just a scaling difference. It doesn't matter. I use the same ratios to make my trade decisions. I'm not going to change my money management because I know how not to take losses. Now, sure, there's ways you're going to end up taking losses, but it's not going to be because you make a stupid decision. It's going to be something out of your control. Just because the market comes down, that's totally out of my control what the market does. But what I can do is learn how to manage my money and say, okay, how can I leave my money in the market in worst case scenario? Let's say the market goes down 50% today. How can you still make money in a market that's down 50%? Well, it's being involved in the stocks that pay you dividends. There's no other way to do it. Unless you're shorting the market and then you're borrowing, but you're paying interest. No, yeah, it's pretty cheap right now, but if the market's going down, something I don't, then you're probably going to be shorting the heck out of this market. Let's go back over here to Mosaic and get an idea. Looks like we got a lot more positives than negatives. TLT looks like it's down. What's that one on the chart? Down on the day. Looks like it's 4 days up, but not really that much movement. 134 to 138. Still paying that dividend though. Looks like it came up a little bit. Nothing special. There were a lot of people, what they want to do, they want to come in and they want to make that mortgage payment a month in the market. I said, well, you can do that, but um, how much extra? What's your mortgage payment? If it's $2,000 a month, I mean, you got to have a minimum at 10%. 10% of a $200,000 portfolio is $20,000 a year. So you got to have a minimum $25,000 just to pay your mortgage, or $250,000 just to pay your mortgage. This is what I'm talking about. People don't understand numbers. You got to be debt free. You can put money in the market, but as long as you're owing on something, you're looking for huge gains in the market. I see people. I can tell you at least two people I know in the last 3-4 months that are traders, and they think they know. These actually bank examiners. They think they know the markets, and they make big bets. They go in like, okay, I'm going to put $20,000 down on this. It goes down. They hit their stop. They lost $5,000. I know I know at least 3 people that do that. Lose money consistently. And I consider these people pretty smart. But when it comes to money, have not a clue. Yeah, they all have degrees. I have a degree in engineering. But they can, I've told them, I said, you might want to just look at your, dividends and let them grow. I said that $5,000 could have been 5,500 at the end of the year. But I guess it's because, they make really good money. They're 6-figure incomes, and they're just betting. That's all they're doing. I asked them, I said, well, why'd you buy it? Well, I heard this news. It's like, oh, when are you going to stop listening to the news? How many times over the years that I've known you have you listened to the news and lost money? But, a couple months will go by and they'll hear something and they got a little extra cash. Say a little extra cash, they take 20 grand, they stick it, I'm going to buy, 100 shares of this $200 company, and goes against them, and they don't want to lose that whole 20,000, but they'll lose a quarter of it. All they had to do is stay in it. But people get burned all the time because of what they listen to, instead of understanding the logic behind not taking losses. It's not flashy, but it's got teeth. Where did I hear that? Oh, the firm. Yeah, it's not sexy, but it's got teeth. That's exactly what we do. We're constantly pulling money out of the market. You can't stop us. How are you going to stop us? Tell me how I'm going to lose money. If you can show me how I'm going to end up negative, I'll listen. If you can't prove it to me, I can tell you that I will never end up negative on a year. It'll never happen. Now, I may take a loss, and I'll show that, but it would have to be a loss that overrides what we're actually making. So each time, like, we'll show it. If one of these stocks goes out, or let's say it was even a mistake, like we fat fingered something, which it's going to be rare that I do something like that, because my orders, I can see them. That's why I talk about the charts are easier to see. So you can see that my order to sell is above my average cost instead of being down below, because if this was below, it would be a loss, right? So we're not going to take losses. We're just going to collect those dividends, and we're going to work off of that price movement. It looks like this Medline, MedTech, whatever this is. It's pretty expensive stock. Hence, that's why we have very few shares, because we only have, where is that thing? Man, I was just looking at it. Where'd it go? Damn it. Anyway, I think it's like 2 or 3 shares, something like that. Anyways, you don't have much money in it, but we're just looking to close the position. That's based on this. Now, if it already came down and hit our midway point, right, on our 50% retracement, we can see by our lines on the chart. But I don't see anything else. Yeah, oh, there it is right there. Yeah, so we had 2. Right, so we're looking at profit, dividends. So it's going to be about 11.36. Right. So people poo-poo that. $11 and say, why? Because they live in big city, you know, they're big money, big money, you know, but they don't understand numbers. And it's like, well, if I manage a $500,000 account, so it'd be 60. So it'd be 6 times. That'd be 66. And you look, huh, what's he talking about? Well, they don't understand numbers. All they want to do is flash cash. These are your rocket scientists, you know. You get tired of listening to them because they're so smug. They haven't got a clue, but they're in debt up to their eyeballs and telling everybody how fast they trade and how much money they make, and then you don't hear from them for 6 months, a year, and then they come back at us. Well, I just started this new system. I was hoping something would actually trade out. It doesn't look like it today. We're pretty close on a couple of those, but it's not looking like it's going to happen. I'm just looking at these fast movers here, see how close we are the ones that are actually over a buck. DFS moving. Yeah, that one's just kind of flat. Kaloo. We've traded that one a lot in the past. I don't even know what they do. Don't care. Travelers Insurance. It's always a good one. PRK. Yeah, let's Kellogg's. This is what I say. People, oh, it's going up. It's coming down. Oh, it's going up. Oh, it's coming down. Back and forth. People's minds just, you know, screw with them because they don't have the patience, you know. So people say, well, look, you got trapped at the top. And I said, I didn't get trapped. It's a strategy. It's all part of the strategy. We don't care what we buy it at. We care how much we bought it at. That's all, you know, how many or how much of our portfolio we buy. We can buy, you know, if we have unlimited funds, I'd just be buying every dividend paying stock out there. You know, but it's based on how, if you had unlimited funds, meaning you're the U.S. government, you can go in and buy as much as you want and say, okay, well, I'm going to buy what's ever available in PBT. So you go look and see how many shares are left there. You buy them all up. You sit back and you collect your dividends. I don't care what the price is. This one's making 13 cents a year. Maybe you got 1 million shares. Work it out. You never have to sell it. So what if it goes down? You're still making the dividend as long as it's paying dividends. But you see my point. If they stop paying dividends, you got 1 million shares. Now you're stuck, right? All right. That's it for today. We'll see you in the afternoon. Have a great day. Remember, don't take losses. Later.